Well, Nathan Davis here with Community Lending and the More Than Mortgage podcast. I'm here with my friend Frank Ehrhardt with John R. Wood Properties, and we have a new guest today, Eric Feichthaler.
You got it.
I did it right.
Yes.
How about that?
Okay.
Attorney Eric Feichthaler as well from the Cape Coral office, just over the bridge right there.
That's right at the base of the Cape Coral Bridge.
Wow. Looking forward to talking to you because you have some interesting information for us. And Frank, maybe you can tell us a little bit why Eric is here today.
Yeah, absolutely. So Eric and I sit on a board of a nonprofit together, and at the end of the last meeting, Eric had mentioned some information about casualty losses, and it was just providing the information to the other people in the room, and I thought, boy, I'm in this business day in and day out, and I had never heard of this before. So I thought, boy, Eric, this would be great information to provide, and so that's why I asked Eric to come join us today.
Yeah, and timely too. Obviously, we have a lot of people in Southwest Florida who have homes that have been damaged or are still damaged from Hurricane Ian. It's tax season, so the very timely conversation right now. So maybe Eric, can you share a little bit about what you and Frank were talking about?
Absolutely. So it's one of the times where you actually might want to hear about tax season and what tax can do for you, because it's one of the situations where the middle class, the working class people of our area can really benefit from the rules. And so typically you can deduct a loss from a casualty loss like Hurricane Ian. This is what we're talking about today. But there's an alternate valuation you can do rather than looking at the actual out-of-pocket you've had. You can actually base it on the change in value of the property that was before the storm and then immediately after the storm. Taking the difference, that is the initial starting point where we can deduct a serious amount of money from people's taxable income and their taxes.
Wow. Yeah. I mean, and obviously we had some adjustments in value since then besides Hurricane Ian. I mean, Frank has kind of acknowledged that in some of his reports. So is that also taken into consideration?
Well, that's the basis of why this works so well, because the IRS regulations don't distinguish between why did the property value go down. If it goes down, then there's a potential benefit. So we saw the contract values peak May and June as interest rates started to creep up, and so those transactions closed generally right before the hurricane. So then after the hurricane, you have a significantly higher interest rate, and then of course you had many people that were selling in a panic or possibly had damaged homes. And so if you look at a market analysis, which a realtor like Frank can do, you can see that there's a significant change. And again, that difference in the valuation before and after, that is a starting point for the amount you can deduct from your taxable income in 2022. And in many cases, our clients have seen around a 12 to 15% reduction in that number. So for a home that was worth $400,000 beforehand, it's coming in around $350,000. Can you imagine deducting $50,000 off your taxable income? That could be a significant amount of money for a family here in Lee County.
Oh yeah, no doubt. Wow, that's amazing. Now, do I have to have sold my home to justify that value, or can I still be owning the home and still take this adjustment?
The key is before and after you had to own the home. So if you owned it beforehand and then you've still owned it after, you could even have sold it last week. You can still take that casualty loss for 2022. So there are a lot more complications and calculations besides what I've told you. The first one is if you've received insurance proceeds from your either flood or homeowner's insurance, that is offset to the amount of the change. So if you went down $50,000 but you got a new roof for $70,000 paid for by insurance, you're not going to benefit from these IRS regulations. But so many people, because their deductibles were so high or didn't have a huge amount of damage, some people didn't have any at all, they're the people that are going to benefit the most because there's no offset for insurance proceeds received because they haven't received any insurance proceeds.
So that's a good question too. So I'm still fighting my insurance claim, and so but I want to deduct the casualty loss in 2022. What happens when insurance finally does hopefully come through and give me a check later in 2023?
So all you can do right now in tax season is go with the information that you have. So if you have that reduction value and you don't know what insurance you're getting, you can file today based on the situation today, because the insurance situation, as you know, and as many of our residents in Lee County know, it's not certain by any stretch. But you should amend the return after the filing date if you do get proceeds back. So yes, you could wind up having to give the IRS some of that refund back potentially, but again, overall you're still generally going to come out way ahead. At least nearly all of my clients have so far.
Great. Well, one of the things that surprised me about this too is this doesn't have to be your primary home either. This can be an investment property, is that correct?
That's right. The loss can be for any real estate owned at all, whether it's investment property, it can be commercial property. Any kind of property at all that's owned that changed in value between before and after the storm. The IRS is going to say it was as a result of that disaster, being Hurricane Ian, and that deduction's available. Do want to mention one thing, that there's another part of the calculation that a lot of people have asked me about, and that is the AGI floor, or adjusted gross income floor. So for a family of four that's making $100,000, the first 10,000 or 10% of AGI cannot be taken as a casualty loss. Only Congress, through a vote of the Congress, can vote to eliminate that AGI floor. It's incredible to me that 6 months after the fact, they still have not voted to do this. It seems like the most bipartisan issue they could possibly have, but they haven't yet. I anticipate they will. The last time they did it, Hurricane Irma in 2017, which was obviously a fraction of the damage caused in this one. So if they change that rule and say you've already filed for the casualty loss deduction, you can amend your return and get the additional amount that you would otherwise have gotten and get that too. And so there could be additional things to do, but it will just work to benefit a lot of the people of our area.
Yeah, it almost seems like this, just about everybody should be taking a look at this. At minimum, we've had a reduction in values in our homes, and it was a huge hurricane. Even if you had minimal damage, and it seems to me from what you're saying that those who had minimal damage really in the long run will be the ones that will benefit the most from it, because they're not going to probably get any insurance proceeds. So, it would just seem like that everybody should be paying attention to this.
That's right. So any county that was declared the disaster area for purpose of general federal aid, so Collier, Lee, and Charlotte are all in there. Anyone that lives in the county can potentially take this. So if you were in the farthest part of East Lee County or Collier County, you may have had no damage or barely any. The way the IRS regulations are worded, that will benefit those folks the most, the people that either suffered little damage or received very little from it. I also wanted to mention that the deduction can be taken also in tax year 2021.
Oh.
So we have a lot of clients that have recently retired, were making significantly more money in 2021, made less last year. They can take that deduction in 2021 and even have further savings than they would if they deducted it in the current tax year 22.
That is fantastic. I know for my business, it was a lot better in 2021 than it was in 2022.
Yeah, especially real estate.
Yeah, so that's some really good information. Eric, can you tell us a little bit about what you do on a day-to-day basis? I've been in the mortgage industry for 26 years, all in Southwest Florida. I have seen your name a lot. I drive, obviously we drive over the bridge, you can see your office there. Can you tell us a little bit about what
Sure.
you do?
I'm a partner in the longest running law firm in Cape Coral, 47 years, at Burandt, Adamski, Feichthaler, Sanchez. I'm the transactional attorney, so I am board certified in real estate law, so I handle everything from title insurance to evictions, 1031 exchanges, basically anything involving a transaction on the real estate side I work with, and also estate planning. So we also, though not related to tax, you do want to avoid probate costs and fees and making sure your family has the peace of mind that they'll receive the things that you want them to receive. So I do a lot of that kind of work. And then people have a lot of tax questions that come up. So I have a background in tax from 25 years ago. I have a master's in laws from NYU in taxation. And so I do understand not only what goes behind tax, but also tax policy. And so, again, knowing that this exists, a lot of people don't realize it, especially for those who have CPAs still up north.
Yeah.
They have no clue that this is available. But again, I've never seen so many people happy to file taxes, because everyone that I know is paying less than they expected or getting a much larger refund than expected. So it's been really nice to do that.
No doubt. So I can imagine, if somebody who has already filed their tax return and maybe didn't know about this, they're hearing this podcast saying, oh, this sounds great. They can amend their tax return and take advantage of this. Is that
That's
correct?
absolutely right. You can file an amended return anytime 3 years after a return is filed. So I expect a lot of people will be amending their returns. But one thing to consider is you might want to wait a couple of months to see if Congress finally takes action on removing that 10% adjusted gross income floor. That would be the best time to do it. But like I said, even if you had to amend twice, the cost benefit would be absolutely to amend. And if you've already filed your return and didn't have any idea about this, remember the first step is to call a realtor like Frank and to determine that pre and post value analysis. And once that's done, if it shows it went down significantly, again, significantly could be even $7,000 or $8,000 total reduction. It's still going to get you some good money back from the IRS. Start with the realtor, make sure it went down, and then go from there with your CPA, or give me a call and I can help out too.
Yeah, that's what I was going to ask. So I pick up the phone, I talk to Frank. Frank uses his tools to figure out how much value my property lost from the time that Hurricane Ian it hit until, is it the end of the tax year? Is that?
No, it's immediately after.
Okay.
And so, because a lot of people will say to you, well, I can see values have kind of bounced back up a little bit. In fact, they might be higher than they were back in July. We're looking at before and after, immediately after the storm. So basically the things that happen a month or two. after the actual event. So they were looking at October and November closings. And again, handling 30 transactions about a month for me in my title practice, I could see absolutely from a practical perspective that those values came down between 10 and 15% during that time. So all the numbers are really matching up with what I expected. I'm just very thankful that, again, the IRS is tough in so many ways that people will finally get feel maybe good about their tax returns.
Yeah, that's a rarity.
That's right.
Yeah. So Frank uses his tools, figures out what that reduction in value is. Then can I pick up the phone and call Eric and you'll help me out?
Yeah, I'll talk to you about either talking to your CPA or accountant about what you need to do, or my wife happens to be a CPA, I think the best in the area, and she's worked with a lot of clients on this, and again, a lot of people have been very, very happy about that. So the key is whoever is doing your taxes, because it is somewhat complicated and you don't want to get it wrong, I do recommend hiring a professional to handle either your tax return initially or for the amendment, just to make sure you're covering this all correctly, because as you also probably know, the IRS has gotten some new funding for enforcement, and you don't want them to be knocking on your door, and there are known red flags by CPAs that we avoid, and we definitely want to do that for everyone that seeks to get this reduction in their taxable income.
Well, that's some great advice. Could you share your contact information with our listeners?
Sure. It's Eric at CapeCoralAttorney.com. My name is ERIC at CapeCoralAttorney.com, and our office number is 239-542-4733. Also, website is CapeCoralAttorney.com.
Beautiful. And Frank, could you share your contact information as well?
Absolutely. Website is johnrwood.com. My cell phone's 239-896-3437. And Nathan, your contact information?
You want to know how to reach me? 239-898-8841, agentslender.com. It's been great talking to you guys. Great information, Eric. Thanks so much for sharing that info.
Thanks for having me, and I hope it helps a lot of people out.
I'm sure it will.
Absolutely.
Thank you.
Thanks.